Waves of Profit. This is a software for people that want to day trade. 10% in 10 minutes is our mantra and our mission. And on our YouTube channel, we show you tons and tons of examples of how that's possible trading options. So today we've got Alan Maxwell and Stephen Wright, and we're going to be talking about gaps and answering a few questions. So with that, I'm going to turn it over to Alan. Here you go. Thanks for joining us, everybody.
Thanks. Well, Scott, we're going to look at a few different things. So this is, I would call, a little bit more advanced training. So if somebody's watching this and going, I don't get it, that's okay. Just come back to Waves of Profit or the YouTube channel here, and or send us an email or some digital connection here, and we'll get back to you and give you the stuff so you go, oh, okay, I get it now. So here, we're going to talk later about gaps. We're just going to go look at a bunch of stuff. But the first thing, because I was asked recently, says, what do you use? And I use everything that you see in the tool, but that doesn't mean there's so many features here, and it's meant that way, that you pick out the stuff that you like. Because some pieces, somebody just naturally goes, yeah, I know what to do with that, but this other thing with the lines and the boxes, I don't get it. And that's why they all work. It's a question of what you like that you can work with. Some people like eating with a fork or a spoon or a knife. I'm not going to tell you what to do. I'll just say, hey, here's a whole set. Do what you like. So in that respect, one of the questions is, well, okay, so what do I do? Well, here's the main list. And yes, I use the main list. That's not meant for beginners. That's on purpose. It's kind of like the movie The Matrix. You see all those dribbling numbers, and you go, somebody's having a barbecue. Yeah, you see that thing right there. Anyways, I'm good with this, but what we do is we start people out with the basic list, and that's on purpose. And I'm going to talk to you about what I use and why the basic list exists. This is called the short list, and you just get it by clicking this thing here. It will switch to the main chart, or make it into a short list with the 60-minute on the bottom. Why we did that, or I did that, is because this works. The list here is a short list because it's grabbing stocks that have the best chance of moving in a specific direction. And I use that. And that's why it's in the program, is because it works. It doesn't mean it'll grab every move. It's not meant to grab every move. When you get really good and you're one of these guys that, like me, that says, oh, here it is, I can see this and I can see that, and I'm just going to go grab that thing. Or for example, this list, which is a really great list, I can see instantly that this one stock has broken to the red side out of the risk zone because of those two markers. So if I go to the chart, it's outside of the risk zone on the bottom. Doesn't mean I'm going to trade it, but at least I can see it. So that's the whole point of the lists. I'm going to get back to the short list again, is that I can see things depending on how you sort it. So we're going to sort by D% and talk about that very next thing. But the first thing we're going to talk about is this, which is the short list. So that G there is that G there. And so here, Netflix has a G there, there's a G there. What does that tell me? Oh, and this one's got an R. It tells me that these things, if it has a red move, in the case of the R, that I should go look at riding only the red side of that stock today. Now, we only need one good trade a day, and you're on your way to making good money. So let's move forward a little bit in time and just see how it did. So any of them did. So here we go. That was Celgene, and it says if you get a red move, if the market's not fighting you, that's the basket. And today, on this day, the basket's not fighting us. So it's like you can go either way, both sides, in fact, if you want. Not at the same time. So Celgene, I didn't look at anything else. I didn't even look down here at the 60, which is helpful. I just looked at this thing here and it says I should only be going for the red side on this. And I'll tell you why I look at that first. It's my first filter. And I don't always do it, but that's what I look at first. So here it is. I've got Celgene had a good move to the red side. Let's look at ACT. It had a good move to the green side. Amazon had a good green. Google, it barely broke out the next candle, which I pay attention to. It bounced off our target zone. So that wouldn't have been a trade for me. GoPro, I'm looking for red. Well, red's starting right now, but it's an old move, so maybe I wouldn't grab that. IBM, green, said go look for the green side. Well, it did have a good green run, and look, it bounced that RB. IWM, which is a big index. I was supposed to be looking for the green side. It's not bold. It's just, oh, I hot listed it. That's why it's on there. So this one, IBM, yeah, we looked at. Netflix. Look for a good move on the green side. Did it have a good move? Well, it was kind of weak, but it went, and it bounced off RB. PCLN. I'm looking, now this is what I wanted to show you. I'm looking for a green move. I didn't get one. If I go forward to the end of the day, well, I did get a green move over here, and that was an old move, so I wouldn't have got it. This other green indicator here on this side was small candles inside the risk zone. I wouldn't get it. This one here, the second candle, didn't follow through. I wouldn't have got it. It was also at lunchtime. So here's a SPY had a move at the end of the day. Well, I'm not going to be trading that. When it did have signals, it was in the middle. I just don't want it. So I'm going to go back to more like the beginning of the day. And these things do come on and off the list. They hide it for you. It's like, well, that thing's no good and I don't want it anymore. So here's ACT. If I back up to where is this? It's a bit of an old move, but this is a really nice location. Breaking above a 7-day high, which means that on the 60, it's breaking out. How's the market? Well, I've got green up here. Generally, it's green. This would be a great one to look at for the green side. Plus, you've got rank points and at least some points on the cornerstone system, which is Steve's contribution. So here's Netflix. I don't have signal. Yeah, it broke out, but I don't have signal. If you want to, you can go ride that baby, even though you don't have signal. But that's for the masters that go, you know, this is a breakout. Let me go look at the volume. I'll turn volume on. Do I have volume? It doesn't look like I really do. It is fat, but the whole thing's fat, so I can't really tell that I'm getting great volume right now. So there's the volume, a spike, and it pulled back. This is not a great move. But when I change, you know, it changes time automatically. It says, well, you should have got it back there. Looking at 4-minute candles. If I look at 5s, well, you should have got it then. But in the morning, I have it auto change because sometimes I use 5s depending on how busy the day is. But I just let it auto change the candles. So if I miss a couple moves, I don't care. I just want one good move, and this is part of the mindset. Is I'm just looking for one. So I have a bunch of choices here. Netflix is off the list now, but Amazon here has lots of points. It's got the big G. It's looking in a really good position. It's broke a previous high. This is a great stock. It's also above this target price, the RA. You could probably get that and make money. So if we just move forward, and it did. You'll notice the second candle carried through, and then it went on and would have made you money. And just because Scott's here and he likes me doing this, let me just back up. So if you wanted to wait to get out of the risk zone, you could. Right there, it's at the edge, but I already know this is the second candle. Good move. It broke RA. I got green on the market. Not strong, but that's okay. This stock's been going up a lot. So here we go. 8%, 9%. You'll notice at the top here, that would have actually at this point made you your 10%. And that's good enough for me. There you go if you wanted to hang on, 16%.
So I want to jump in right here because, Stephen, one of the things that Alan and I have been doing is we've been doing a series of videos based almost every day where he shows 3 or 4 stocks, how they start, just like what he showed you now, and it made between 10 and 20%. And the goal is 10% in 10 minutes. And most of the time, they're really like 10 or 15% in 3 or 4 minutes. But part of the problem that we're addressing right now is greed. So it's kind of like, oh yeah, I want to hit the home run. Well, the home run comes once in a while, but more often than not, after you hit about 10%, there's a pullback because the stock's it's always a wave. It's always going up and it's always going down. Just happens to be depending on when you're doing the ups and the downs. And in terms of presenting to the population, the idea of 10% in 10 minutes is something that we've just it just became something that we latched onto, right? And what happens if you make 10% in 10 minutes and you do it consistently over 3 or 4 or 5 or 6 months? That's way better than, oh yeah, hitting that home run and then screwing up for the next 3 trades and then hitting that home run and screwing up for the next 3 trades, right? So we're kind of making this our mantra, 10 and 10, because we want everybody to be making, let's say we start off making an income, right? Like, as opposed to maybe making some money and probably losing some money, which is what tends to happen in the longer. Well, when you look at the day, you can just see they go up and they go down. Sometimes they go up and keep going. Sometimes they go down and keep going. But the majority of them are going up and down, which means you're losing the time value of options. So just wanted to jump in and kind of emphasize that, because if we start someone off and it's just like make your 10 and 10 minutes, and then after that you can do whatever you want, is a little bit different than just like let's ride this horse till it dies.
Mm-hmm. Definitely.
So this is the formula is not complicated, and so there's been updates over the last month or so where this instrumentation tells you a whole lot. So I've got agreement here. I don't have to look at a whole bunch of other stuff. That's it. I'm done. So that's what I use. And yeah, I'll go off the map, so to speak, and I'll go grab a list like this. And again, I can tell instantly that doesn't mean it's a trade, but these guys are above the risk zone. These guys are below. This one's above. Doesn't mean it's an entry signal. This guy, this is not looking too good. That stock, because of the pennies and it's both sides, it's just not good. But it takes a little bit of getting used to find these things. So that's that. I'm going to show you something else though that's pretty powerful that you might like. This is another feature that's in the program. I'm going to go switch back to the main list for a moment. We'll get rid of the pen for now. Okay, so here's the main list is right here. We'll hide that guy. And so let's go switch back to normal charts, just one big main chart. This D% is using some of the statistics, oops, there we go, that tell us that when it's bold and below 90 and above 40, that these things for the first part of the day are probably worth looking at right away. So again, it's not like this is, you have to do all these things. You pick which ones you like. So this is just a different style. So I'm going back to an early part of the day. This is 9:33. I already know that these guys that are bold, and you don't have to sort it by bold. We're just doing it for convenience. By D%. D% means the daily range. How much of the average daily range has this thing gone? So these guys haven't moved at the bottom half, and these guys have moved, and they've actually moved ahead of the curve. And there's a statistical curve. Where is that baby? Well, for the engineers that are out there watching this, that's it. And I did have an engineer look at this recently. He says, "Oh my God, that's fantastic." If you're not an engineer, you don't know what that is. Whatever. You don't have to. But this basically says.
So that's the rocket science right there.
Yeah, that's the math. That's the genius part that's working for you in the background, is it does all that. And that's what this is, the applied genius in this sense, where it's saying this stock is ahead of the curve for its movement. Well, what does that look like? I'll put this aside so you can see the thing. This is ahead of the curve moving. And you can see I'm just picking these things at random. I'm going to pick the bottom of the pile, this guy, and say, well, he's not ahead of the curve. Well, what does that look like? Well, it looks like that. He's pretty flat. So what about this one? This is the top. Well, it had, I'm going to hide the brown there at the bottom. It had a big move, and it was a spike and all that. Well, what's going on? Well, it had a gap. We'll get the gaps. You see, that's a big gap over here. You see, because this is a 20-day range is this box around here. It's basically gapped up about a 20-day range. Not quite as much, but pretty close. Anyways, back to the point, back to the list. So, of course, that one's acting crazy. But let's look at this one, Netflix. Netflix is on the move. That's what I'm seeing right here in the 3rd minute. Does that mean I'm going to ride that guy? Maybe. I've got G here. I've got, the market's telling me pretty good things. So that's instantly a candidate. Doesn't mean to go trade it. But you see how this is a different style, but it still gets you to the same goal, is you're a candidate. So, and then anyways, all of these guys that are bold means that they've had movement. See, this was a up and down, but it still moved a bunch in the range. It's ahead of the curve, means that they're the runners. This column is only useful for the first part of the day, because that's when you're starting to see the energy, when something is moving. So if we go look at another one, so remember, this was the one that, well, this one had, I just moved forward a few minutes. You can tell that this thing's really moved, and it's already at 95% of its normal range within the first 7 minutes of the day, which is pretty phenomenal. So you could actually learn how to use this for the first, from 9:33 to 9:44. You'd be out at 9:44 or 9:40. You'd make great money. And then you'd be looking at 9:48, because at 9:45 there's a plateauish reversal kind of thing, and you'd be getting out about 10 minutes later. And so let's just go look at a few of those guys. So here it is. I'm going to move you to 9:41. That's a good one. So these are the ones that moved, and you would have spotted it because it's here on the D%. I'm just going to roll through them. So there's Baidu. The next one, Cyber. Now this one's jumpy. This was the big gapper. Then there's this one. You can see it's hey, it's hitting my rules, right? It broke the risk zone. I got green tint, and it's moving. And where does it stop? My friend over there, the target zone. How about the next one? Well, this one up, down, up, but where's the clue? Okay, this is a skill testing question, Scott. Where's the clue that I should not be riding the green side, hint, hint, on this stock?
The little red box up on the top.
Yes. Don't go that way. Yes, the market's green, and it's a nice green. Get the next one. Don't bother with this one. That's right there. Very fast. So, well done, Scott.
You put so much pressure on me, Alan.
So, and you can go down the list here and say, well, these guys have kind of moved, or they're in positions. This one's at a 52-week, so that's one of those kind of weird ones. You want to see how that turns around. 52 is usually it sells and wobbles, unless it's been hitting them again and again. Because if it's the first time it's hit 52 in a while, it'll cycle down quite often. Not always, but quite often. So here's a reddish move on a stock that I'm looking for a green run. There was nothing there. Here's a red. Well, maybe there's a chance to make money. It didn't do it. It almost did, but pretty soon I could watch that. So this is it. It's like there's not a lot more complications. I'm looking for it to break the risk zone, and they haven't. These ones haven't. And typically when it gets to deep, if you want to be breaking the risk zone, you're looking for D% to be about 40, and then it's probably broken out. So that's a pretty fast way to scan the list. You can sort it this way. You can sort it. I mean, points is awesome. Points and rank and corner are great for other parts of the day, but for the first, well, what do you do in the morning? Well, you've seen me look at two different ways of doing things. You can go look at the D% for, ahead of the curve, but even if I'm there, I pay attention to the instrumentation up here that says, wow, this one's great. And by the way, in case you don't know, this business up here, these guys, one, and if you hover it tells you, one tells you that it's great volume for the day, that shield with the check mark says that's great volume for the day today, and the other one is for the moment that is great volume. And so when you've got strong volume, it's showing you that right there. If we go look at some other stock, let me go pick something else. I have, a low orange bar, which is a warning. This says low volume for the day. And then this one here tells me that it's above average trading volume for this moment. It's a wide candle. You can see it. And if you turn the Volume Genius on, it may tell you as this minute completes. Yeah, it's down there, but it's a little bit low. It's not great, but it is there. Anyways, so that tells you also in a microsecond what's going on. And of course, you can always look at the 60. In a case like this, I wouldn't want this stock, up or down, unless the volume's great. But this is in a good position to go to the green side. If it goes green, there's nothing really stopping it over here. So, and that's where we're going to switch up to talk about gaps, if that's okay with you guys. Any thoughts, questions? Make sense?
Steve, any comments?
No, it looks pretty good right now. Definitely want to see about these gaps.
Yeah,
Okay.
gaps are awesome, and it can be like a bucking bronc. There's a lot of energy, and if the gap is too big, it's it can be dead. It can be really flip-floppy. The better kind of gaps is when it's not too big a gap. And so I don't know how many gaps there are today, but I'm going to show you how you find out. You go right here. There's a gaps column, closed open gap. And these little icons, I'll just draw little markers around them. See this one here, I know I'm drawing right on top of it, but you see there's only a few that have them. But what that marker means, that little bit there, I'll just draw it here, is that if this was yesterday's candle, whatever it was, we don't care what it is, but the high might have been to here, but the bar means that today I opened, here's my mousemanship, I opened above what that high of yesterday was. So in this case, it opened below what yesterday's low was. So that tells you quite quickly, and you know how big the gap was, so $8. So you can sort by, whatever you want. And of course, you got stocks here in this list. Like here's PCLN. There's an $8 gap, but it didn't clear. Let's go look at that. And let's go look at the daily. See, that was the close, was $8 below here. So that's not what's called actually a gap, because it's inside of yesterday's motion. But it sure likes to be moving up, is what it looks like. You got green tint on the daily. I'm sure you've got a G on, if you go here, yeah, it's got a G. The math did that for you. But if we go back to the daily, you can see that this thing seems to like going up. And this is where you want to use pre-market. Pre-market, if there is pre-market trading. Let's go. Pre-market, you just click on it right there, and it'll draw boxes and show things to you if there is pre-market trading for that stock, and there doesn't seem to be. So let's go look at something else for a moment that has a gap. Back to the list. I'm going to sort by gap size. So there you see this blue box that I've got here. that tells me the pre-market range. So before the market opens, I've had a clue that it was in this kind of trading. It's very thin trading, but it is trading, and it could be overseas, or it could be the, people that have access to that kind of stuff. Here's one that's gapped up. Now, yesterday was, the previous day was down, and it gap. This is the kind of gap that's a decent size that you can sort of predict what's going to go on. And this has already moved up now for 12 minutes. So this is what would be called a gap and go based on a reversal. So it gapped down yesterday big. And yesterday was a real big gap. And this is the rule about gaps. They like to, not always, but most of the time. That means we have a probability in our favor. They like to fill to the bottom of a candle range. So just to draw it for you. So I'm going to turn off the pre-market. We'll do that later. So this was where it gapped the previous day, is it went down like this. And so there's this big hole here. Well, there's reasons why, and I won't get into all the psychology, but quite simply is when there's a big hole like that, quite often it will get filled up into that hole by trading. People will say, well, that's too cheap or too expensive, or I'm going to sell it now, or oh, I get to buy it, or whatever. And so they're causing a bunch of trading volume because there's this something wrong with the market, an opportunity from their perspective. And these are investors, okay? So they're in for the long haul. They're looking at their stock price from, way back here. Let's get rid of that pre-market. And they're going, wow, this thing is, been sliding down, or whatever they think. See, here's another gap right here, and it was a gap and go. And so you get good at these, but it takes a while to learn it. This was a small gap, and you see it wasn't a problem. It was red there, it opened below, and that was a straight down gap, like it gapped and go. It didn't fill. And so this is where you get to learn by looking at them, and you see quite often, oh, that was a gap and go to the green side. So this one went red, and it gapped down. It ran down, ran back up, but the next day it gapped higher. It didn't like being down there. That was a big gap. So this is where you start to learn the feel of it all. We'll go back to the list for a moment. I'm giving you the high speed kind of tour. So that was Baidu. Here's Visa. This had a gap. Now you notice this wasn't a big gap, but it actually opened up here, and it's been running red. So it filled this little bit here. But the way this is looking, okay, a probability, it might be running down to fill to that point. So let's go to the end of the day and just see what it does. And it did. It filled it and went further. And so at this point, when it was running down, and let's go look at how the day turned out on this stock. So see, it gapped above, see, it says right there, the previous high. Let me just draw some stuff on the screen. So the previous high, it opened here. So it did a fill to down here, and then it actually kept going. And it does the fill in the first half hour. So if you don't like the way things are going for a gap, and you don't, it's too jittery. Like here you can see there was a long tail. That would be like, whoa, what's going on here? But you'll notice it started to pick up a trend going down. And that's where you can say, oh, I don't want to be the first guy in on a gap. And you don't. I don't. You do what you like. But I don't want to be the first guy on a gap. I'll let it settle in a little bit and go, oops, well, I missed it. But then it started, settling in and going into a trend. And then, it hit the target, which was, in this case, the previous high. It went a little bit further and then does whatever it does. I don't care anymore. This was the opportunity, was here. So when did it become safe? Well, that's where you got to hit the replay and look at a bunch of these. But getting in at the first 5 minutes, if you want to, you can, but it's pretty volatile, and you can lose a bit of money or a lot of money. Let's go back to the list for a moment. Let's just get rid of the pen. Okay, the list. We were at Visa. where's another decent sized gap that wasn't too big? Okay, so NXPI, go look at the daily, and we're going to go to the beginning of the day. It gapped up a little bit, not too bad. Now you'd think that this is a gap and go, and let's just see how it turns out. It's doing nothing. It's in the risk zone. That's why it's called that. I don't like it. It's too jumpy. So now it's established some kind of thing, but it's already filled it. It's already filled the gap. That's the previous high right there. So is there a trading opportunity for the gap? No, it's passed. There wasn't a lot of money there because the open was here, and that's all it had to fill was this little bit of room here. And of course, that doesn't surprise us. We knew that by looking at a couple things. One, backing up to the beginning of the day, there's not much room here, which is okay. So I don't know what more you'd want to say about that, but we also knew by looking at the list, if I sort by the value, I'm getting down into some of these dollar values is kind of small. The nice part about this, oops, not that guy, we were looking at NXPI. We were down here. I was looking for one of those icons. Now you're down to 30 cents and 60. It's like there's nothing there. You can't, really get a gap strategy going on this. So here there were 3 to look at. Now Murray, this is all he trades, and he's pretty successful and very consistent about when he follows his rules, which is the human thing. He's consistent about making his money, and why he likes it is there's a lot of activity. It's going to do a couple of things. Well, of course, we all know the stock's going to go up or down, but he's looking for the kinds of patterns that we talked about, which is like, okay, here's Visa. Well, right now, I don't trust you. I don't know what you're doing. You don't know what you're doing. I'm moving forward here. I got a bit of tint. Maybe it's doing something. If you wanted to play the gap strategy, this would be a decent time. You got a second candle running a trend. You got slope on the mag line, whereas before you had nothing. And you could ride this, but where are you going? You're just going to go fill to this point right here. So there's not a lot of money there. Does it do it? Let's just see. Turn off that for a second. So how does it go? Now the market's kind of green. So also this says I should be riding green. So am I really expecting this thing to work? But you got to look at gaps a little bit differently. And so it does hit it. So this is where it's a different set of thinking completely than all the other tools, in the sense of I'm expecting green. Yeah, well, it's a gap though. So what's it going to do? It's going to behave differently. Something's going on. See, here you got a 52-week high and you're above the 52. People are going to be having their sell orders filled. Whoa, all right, I'm going to bank my profit. And so you have a lot of volume pushing it down. So that's why it's different. And gaps can go quite differently than the market. Even a strong market is going one way, the gap can be filling the other way, or it's gap and go against the market, but nobody cares because they think, well, I'm dumping my shares of whatever, and I'm going to go buy this other thing because it's amazing. They heard some news or whatever it is, or the earnings came out. And by the way, this is an old phenomena where, I remember this first happened in 2002 or 3 when I first saw that and really got it, was 3Com, Palm, had their best earnings ever and their best this, and they exceeded everything about everything and everything. And their stock fell down. And you go, what? Why would the stock fall down when it had better than what people expected? Well, you got people out there going, great, time to sell. It's fantastic. There's a whole flock of buyers going to show up and buy my shares, which is, I need that. And so they're dumping their shares a little bit too hard to get their profit. So that's the kind of the thinking behind what drives the market is, of course, people. So that's gaps. And we can go load other days and go look at them, but you've got all the tools available to you. I'm just going to go pick a random day, hit the old game button, and I'm going to go look in the gap column to see if there's anything here. So we got basically two, well, one that's worth looking at. That's data, and we're going to go look at that one. It gapped up off of a bottom. So this is what's called a rounding bottom. It seems to have found its feet, but you see here in the first minute, it gapped up and it's already filling to the downside. I don't know how visible that is, but if we go look at the 60, you can see that's the opening price was up there, and that's where it closed yesterday. So in my book, good chance that this thing eventually today will fill to the high of yesterday. And if we just go forward a little bit, it did. Within minutes, it did. See, there's the daily. I'll go look at the 60 again. See, it's already filled. So any questions on that, guys?
Yeah, can you go back and kind of explain the on the daily, the setup on why you thought it was going down again?
Sure. Yeah, I'm in game mode, so it won't let me go backwards until I go to the end. So we're just going. The idea of game is that okay, so I'm at the end, so I'm going to go to the beginning. So there it is. It's the very first minute of the day. It opened. Let's get the pen. It opened up here. Yesterday it closed here, and my target is going to be this on a fill. Why I like the fill? It's been down here a lot. You can see there's a lot of red tint on the 60. So this stock hasn't, I don't even know what's going on with the stock. This is last summer back in May. I don't care what's going on with the stock. I'm looking at the chart. So here, my first candle's already red, and it's got a tail, and it's coming back. It tells me that right away people are wanting to sell, take their profit, and get out of the stock. Because that first action is, hey, it's dumping time. That's it. It's like I say, you got to get a feel for it. And so here on the second minute, I'm just going to move forward 1 minute. It's like, oh yeah, she's going down. Huge volume here. Here's 1 minute candles. Oops, let me get out of this other thing here. Okay, 1 minute candles. Fat candles. If we go look at some other stock, here's Amazon. They're still kind of wide, but not nearly like this other thing. Like, here's some skinny stocks. Anyways, to me, it's just pretty clear that this thing's just charging down. I've already got slope on the mag. I've got tint on the 1 minute candle. This thing's just ready to roll. People are dumping it to make their profit. It's like, whoa, you're going to buy that for this? I'm out. And so if we go back to the 60, see in the second minute, it's already 2/3 of the way or half of the way towards filling. So odds are, I've seen so many of these things, it's going to fill. Because there's other people, other traders that are saying, yep, that's what's going to happen, because they know. It's like, well, what happens when the light turns red at the intersection? Well, cars are going to probably stop. And what happens when it turns green? Well, it's probably going to go. So at this stage here, there's room. I'm going to turn off the volume. There is room to make money here, but you have to be pretty fast, because if you got in here, your exit point is here. So essentially, you've got this much room to make money. You can do it, because it happens in just over a minute. Now, this is not the kind of strategy I like to teach people off the front, because this business in here, if they don't read it right, they can make mistakes. It's much easier, better if they just say, listen, I've got a red market, which also helps in the idea of, going red with this guy. I've got a red background. What does that mean? Well, if I go to the basket, I'll know what that means. But I've got, everything I need is right here that says, yep, it's looking good. So let's go look at the basket. So the basket's been below the open. That's basically it. Yeah, it's coming back up. The minute log, there's very little information here, but I had a bit of red and now I got a bit of green. So, but is this market strong? No, it's weak. It's drifting sideways. It says no clear direction right there. It had a red start, but it's just kind of mixed mind, which means that if data wants to go down, it's going to go down. At the same time, you've got YY going up. Okay, no problem. Which, by the way, I knew instantly by my friend right here. Reds, 2 greens. So I think I've given you the tour here of what I look at.
Yeah, that's actually much more simple than I envisioned.
Okay, so what I'd like, Steve, is for you to pick 3 days at random or 5 days at random, somewhere in there, and take 15, 20 minutes and just, you know how to use the play thing where you can click to buy a put and click to buy a call and then click to sell and click to sell, right?
Sure.
And just go through them and then just see what your results are and then let us know. So basically it's kind of like, okay, here's the gap thing. I'm going to go pick a couple days. I'm going to see if there's any gaps. If there is, I'm going to check and see if I would make a trade on them. So don't cheat and look at the end of the day. Make the trade. See if you can get the 10% in 10 minutes. And then you may look at a day and there's nothing there, then just go to another day, right? So what we want is to be able to look quickly and say, yeah, there's a gap here. Here's based on what Colin's been saying is the what I want to look at, just because I think if you practice it and then you can come back and say, yeah, okay, I got it, or you can practice it and you can say, you know what, I looked at 5 days, I looked at 4 trades on those 5 days and I lost 10%. So what I want us to get more into is using practice and also being really specific. Like, this was the day I went in, this was the trade that I made, it looked good to me, but hey, it wasn't, or it looked good to me and hey, it was. And because from then we're either going to be confident in the trading or we're not, right? I mean, if you do 5 days and you made 10% quickly in all those 5 days, it's kind of game over. We want to have that feedback and know that's the case, and then you can take it live, right? Or the opposite happens and it's like, yeah, I understood everything when you were talking, but then here's what I did, didn't work out, so then we need to go from there to get it so that it does work out if it's a trading style you want to check into more.
Perfect. Yeah, I'll definitely get that done probably later today or tomorrow.
Cool. I'll just give you a couple more pieces here. The ones I've been showing is outside gaps. That means it's opened outside of yesterday's range. Here, YY, this one stock, it is an inside gap where it opened down here near yesterday's low. And you can, if you get really good with gaps, you can start to see those too, because it's right there on the list as well. Well, where's YY? It had a $2.80 gap. Well, that's pretty good for a stock that only normally does about $4. And by the way, the pre-market range helps you get set up for these things, because you can actually go look at pre-market and say who's doing what. And so before the market opens, you can, and that's what some of the hotkeys are, is you can tag it. I just did that. And here I hot marked it, that one and that one. That way it shows up on your thing right there as one of the ones I want to watch, and it's on your list in the My column. You'll see these little markers. If you said, well, I want that one to go green, I want that one to go red, you can. Anyways, that's what these little check boxes do for you. Is they're just handy markers. So you can tag them as hot and say, well, yeah, I want to just look at the hot stocks. And okay, well, how do they turn out? And by the way, when you do hot marking and you go back to the short list, if you like, they get added to your short list and they're colored up, so you can see that they're the same tint, but normally wouldn't be on the short list, but because they're favorited, or so these ones are favorited, these blue ones, but these ones are hot marked. So it's like, yeah, I want to pay attention to that one and this one, because they were gappers. And so it's like, okay, what am I doing here? And then you can add your target price and say, well, okay, if it gets above that, at $60.13, I want you to go ring the bell. So you can go look at something else. And then, with your alerts, it'll tell you, hey, by the way, if you've got the alerts turned on, that something's happening over there with YY. So you got a lot of tools, and they're not that complicated. They're just take a little getting used to. I just turned off the chart now. So, that one looks like it's going to fill. So here's the pre-market range. If it breaks that, you're probably going to keep going to fill to yesterday's close. You see, yesterday don't behave quite like outside gaps. Inside gaps, you probably get the pre-market range. It might by the end of the day. Well, it didn't though. Fill to yesterday's close. But remember, we're not talking about an outside gap, we're talking about an inside gap. So if you got pre-market range, which is a tighter zone, I don't recommend inside gaps unless you get really good at it. There's not as much money, which means that you have to get out too fast. It's a little dicier. But if you want to go there, they're here. Inside gaps and outside gaps. So here's a tiny outside gap. Well, that's not really enough money sitting there to do anything. What did just for curiosity, what did the stock do? It gapped up, and then it did fill down to yesterday's. See, the previous high is right over here, and it did it really quickly, actually, like boom, within the first few minutes. It filled it, ran away. By the way, you'll notice I'm going to turn off a bunch of things so you can see it quite easily. There's your pre-market range. It's amazing how good that thing is. And one day we're going to talk more about that. But the pre-market is telling you, like, it's another turning point. If you have a stock that breaks the pre-market range within the first hour and a half, usually you get more money out of it. And in this case, it's behaving exactly like I expect it to. Our friend the pivot. And of course, this gap was a 52-week high, and it had reached that 52-week maybe earlier, don't know, but people are selling off the stock. And you can see there's a downward trend here. So there's no mysteries here. It's all visible. Let me just get rid of this.
All right. Well, I think that's enough for today. We've been an hour. And okay. It looks like, Steve, we've given you lots to mull over and chew on. Mm-hmm. Right?
Definitely. I can't wait to practice this and give you guys some feedback here.
Cool.
Yeah.
All right.
So you know the rules.
He knows the rules.
Okay.
So www.wavesofprofit.com if you want to know more. If you're watching this for the first time, it probably looks like either Egyptian hieroglyphics or Chinese, but we get into explaining all of it and helping you with it. So thanks for joining us, everybody, and we'll see you next time.